Hi everyone. Today I want to talk about statistics and management. Now, managing your business using anything other than your numbers leads to bad decisions. And I'm going to give you a couple of examples. First, if you don't know your numbers, you're guessing as to whether you're profitable or how well your business is doing. If you gauge it by, for example, how many customers are coming in and you go, okay, we're busy, we must be doing well. Yeah, maybe, but are you making money? Some business owners manage their business by the balance in their bank account and leave out all kinds of other numbers that they should be looking at to gauge the overall health of their business. So those are a couple of examples. So as a rule of thumb, every part of your business should have a statistic that you use to measure whether or not that part of your business is functioning correctly. In fact, it goes down to every employee should have a statistic that measures how well they're doing their job. Okay, so that's two really important points. So you have a stat for each part of the business, and you have a stat for each employee. Now, that gives you information that you wouldn't have before about how well those parts of your business are functioning. But let's take this a little bit deeper, because there's a flow that occurs in any business of production and income and ultimately profit. So we're going to go through that. It starts out with you need customers. So that's your marketing. Then from marketing, those leads go over to sales, and they close the deal, the customer pays, and then the flow kind of branches here. The money goes to your finance area, and the customer goes to production. Okay, now, so far, it does not matter whether you're delivering a product or a service to them, this is the flow. Now, if you're delivering a product, very often the product is produced ahead of time. So your production cycle can go, manufacture, and then over here to where the customer gets it. You could also call this delivery. You have a quality control step. And then you have, we'll call it public relations. And I'll explain that in a minute. And then on the finance side, you pay bills. And ultimately you get profit. Okay, so that's a rough sketch of the major flow of production through really any business. Now, each one of these can have a statistic assigned to it. Marketing, what marketing needs to produce is people interested in your product or services. We could call that leads or prospects. I'm going to call it leads for now. And then sales would be just that, number of jobs sold or products sold. And the dollar value of your sales, which we'll call gross sales. Okay, finance would have money collected, Bills paid, that's a number of or the dollar amount. Production, your manufacturing would, if you have a physical product, would be the number produced. If you have a service, it could be jobs completed. It could be the value of delivery done. Your quality control really should be a percentage. What percentage of your products or services passed quality control? Now, in public relations, or your reputation is another good way of describing it. You want all of this that you're doing up to that point to add up to happy customers who ultimately leave you good reviews, because that helps you attract more customers. The other thing is that word of mouth comes from that activity. It's a public relations activity that's generated by your entire organization doing its job and doing its job well. If you're collecting enough money, if you're collecting more money than you're paying bills, you have profit. If you're collecting less, you have a loss. So that's a good rundown of the key areas and key statistics that any business should measure. One really useful aspect of this is, let's say your sales are low. Well, you could look a little bit earlier, in this case to marketing, to see, is your marketing generating leads? Did something change on your marketing? Did you stop running an ad, or did you fail to do a mailing or something that has produced leads in the past? And if you fix that, you fix sales. Sometimes the problem is the salesperson. But by tracking all of these numbers, you can zero in on what part of your company you need to address in order to improve your profitability and grow your company. So that's a quick rundown of one of the ways you can use statistics to manage your company. I'll be covering some other aspects of it in future videos. If you found this information helpful, please like the video, subscribe to the channel, and I'll see you next time.